Well, the October-December quarter has not been kind to FMCG companies, and this shows in the disappointing earnings reports turned in by companies in the sector. Priya Sheth and Arundhati Ramanan check out the report card and say that they've all fallen prey to a common demon: poor consumer spending.
HUL, Godrej Consumer, ITC, Dabur. They've all felt the Indian consumers' displeasure in the October-December quarter. Proof: volume growth for these companies has been stagnant at best. HUL, for instance, saw volume growth come in flat at 6%, that's the lower end of estimates. Godrej managed a slightly better 9% growth, but that was again at the lower end of estimates. And Dabur's volumes fell 2.5%. Now each company blames this on slightly different reasons. Dabur says product offtake in Nepal has slowed drastically due to geopolitical tensions. ITC blames supply chain disruption due to the Chennai floods, and HUL says lackluster demand in the rural market has played spoil sport, while Godrej has pointed to weak demand from a few international markets. Valid reasons all, but essentially they all point to the fact that the consumer is not playing ball and may not till the economy pulls up its socks.
Demand for the FMCG industry in India still remains a bit subdued. Versus a year ago though, our volume growths have improved quite a bit. About 12 months back, volume growth in the home and personal care sector in India was around 1%. That growth has inched up to about 4%. The future prospects of the FMCG industry in India really depend on the pace of revival of the Indian economy.
As far as 17 is concerned, we do expect the demand pressure to continue for quarter one, and then going forward it will all depend on the fiscal policies and on the monsoon, which will determine the growth on the overall economic parameters.
Of particular concern is rural demand.
The difference which we have seen very perceptible, and this is something which we had signaled a few quarters back, that rural, which was earlier growing at 1.5 or 1.6 times the urban growth, has now come down, and it is operating at more or less at the same level as the urban.
Increasing competition has also hurt performance. Case in point, Patanjali Ayurved, which has forced HUL and Dabur to re-evaluate their offerings and strategies in the packaged foods and personal products categories.
Now, as far as Patanjali is concerned, it is very clear that there is a growing segment in the natural space, and that is something which is not just a trend in India, but it is also a trend globally. We have a brand Ayush, which we have resurrected, and what's the space? There is going to be more activity in that space.
The only silver lining these FMCG companies have seen is benign input costs. However, a lot of this flexibility in pricing has been eaten up by competition, leaving FMCG companies to bank on higher advertising spends and an improvement in the economy to get volumes back. In Mumbai with Priya Sheth, Arundhati Ramanan.
Well, from motorcycles, scooter volumes to FMCG products, one common thread, the overall crisis in the rural sector. Well, a quick wrap of some of the other headlines. Finance Minister Arun Jaitley along with